Tax season is upon us. Here are 5 things you can do before the April 15th deadline. Number 1. Maximize retirement account contributions for potential tax deductions. Do you know you can contribute to your retirement account for the previous year before the April 15th deadline? If you're looking to reduce the amount you owe for taxes, you can contribute to your retirement account for last year and this year to maximize your contributions if you haven't already done so. Contributions to a tax-deferred account like a traditional IRA may provide a tax deduction in the amount you contribute for that year, pending eligibility. Check the requirements outlined by the IRS to verify the amount you can contribute to your retirement account for last year and if it can be deducted from your taxable income. To another tax-advantaged account, such as a health savings account, also referred to as an HSA, for potential tax deductions as long as eligibility requirements are met. Number 2. Explore Roth IRAs. If you open a Roth IRA this year, you can contribute to it for last year and it won't count towards this year's contribution limits. This allows you to catch up on missed savings opportunities while keeping open the option to maximize this year's Roth contributions as well. In terms of long-term tax savings, Roth IRA funds are contributed after tax, so you won't receive a tax deduction, but funds grow tax-free. Funds distributed from a Roth IRA after age 59.5 are also tax-free after the account has been established for 5 years. You may want to consider a Roth IRA if you exceed the modified adjusted gross income limits to qualify for a deduction on your traditional IRA contributions. Be sure to talk with a financial professional to determine what is best for you. You have the option to use a Roth and other retirement accounts to invest in assets outside of the stock market. Using a self-directed Roth IRA held with a directed custodian, such as Equity Trust, offers the opportunity to invest in a wide variety of assets, such as real estate, notes, precious metals, cryptocurrency, private entities, and more in a tax-free environment. Number 3. Recognize possible savings opportunities. If you realize you didn't save as much as you hoped throughout the last year, there's still time to save for retirement, healthcare, and/or a child's education in a tax-advantaged environment. It's still possible to open and contribute to an IRA, Health Savings Account, HSA, or Coverdale Education Savings Account, CESA, before the deadline on April 15th. Number 4. Know your contribution limits. Keep in mind, the maximum contribution limit includes all contributions per account type, whether it's in one account or split across multiple accounts. Check the IRS website to determine which contribution limits apply to your account or accounts. Number 5. Get yourself organized. There are some basic items and documents you may need as your CPA prepare your tax return this year. Some of them include personal information such as social security numbers for you and your dependents, proof of identification such as your photo ID. A copy of last year's tax return is not required, but it may serve as helpful to have as a comparison point, and your bank account and routing number if you plan on depositing your refund directly to your account. Income information such as W-2 forms from all employers and 1099 forms, interest and dividend statements from banks. To learn more about tax-advantaged accounts, visit trustetc.com/tax season.